Building an emergency fund. This section focuses on the foundation of financial preparedness, having an emergency fund. An emergency fund is essential for covering unexpected expenses or income loss, ensuring that you can weather a crisis without going into debt or financial ruin. Financial safety net. An emergency fund acts as a financial cushion to cover unforeseen expenses, such as medical emergencies, car repairs, or job loss. It helps prevent you from relying on credit cards, loans, or dipping into long-term savings like retirement accounts. Peace of mind. Knowing you have a reserve to fall back on can reduce stress and anxiety during difficult times, allowing you to focus on resolving the emergency rather than worrying about how to pay for it. Flexibility. With an emergency fund, you have the flexibility to make better decisions during a crisis. Whether that's relocating due to a natural disaster, taking unpaid time off work, or covering essential expenses while you look for a new job.
How to start building an emergency fund. Set realistic goals. Start by setting a realistic savings goal. If you're just beginning, aim to save $500 to $1,000 as a starter emergency fund. This amount is enough to cover many common emergencies like unexpected car repairs or medical bills. Once you've reached this initial goal, work towards a more substantial emergency fund that covers 3 to 6 months of living expenses. Automate your savings. Set up automatic transfers. One of the most effective ways to build an emergency fund is by automating your savings. Set up a recurring transfer from your checking account to a dedicated savings account each payday. Even small amounts, such as $20 or $50 per paycheck, can add up over time without requiring active effort. Roundup savings apps? Consider using Roundup savings apps, such as Acorns or Chime, which automatically round up your purchases to the nearest dollar and deposit the difference into your savings account. Cut unnecessary expenses. Analyze your budget. Take a close look at your monthly expenses and identify areas where you can cut back. Redirect the money saved from cutting out non-essentials like dining out, streaming services, or impulse purchases into your emergency fund. Create a temporary frugality plan. If you're serious about building your emergency fund quickly, consider adopting a short-term frugality plan. For example, challenge yourself to spend no money on non-essential items for a month or two and put the extra cash towards your savings.
How much to save? To determine how much you need in your emergency fund, start by calculating your essential monthly expenses. These typically include rent or mortgage payments, utilities like electricity, water, and internet, groceries and household supplies, transportation costs such as gas or public transit, insurance premiums for health, auto, and home, loan payments like student loans or car payments, and minimum payments on credit cards and other debt. Once you've identified your essential expenses, multiply that amount by 3 to 6. For example, if your essential expenses total $2,000 per month, you should aim to have between $6,000 and $12,000 in your emergency fund. The exact amount depends on your individual situation, such as job stability, number of dependents, and whether you have dual incomes in your household. If you live in a dual income household, a 3-month emergency fund may be sufficient since the likelihood of both incomes being lost simultaneously is lower. On the other hand, if you are the sole breadwinner or work in a volatile industry, aim for at least 6 months of expenses to provide a larger buffer. Consider your personal circumstances. If you have specific financial obligations or risks, you may need to adjust your savings goal. For example, if you or a family member has ongoing medical needs, consider saving more to cover potential medical emergencies. And if you have a fluctuating income due to seasonal work or freelance gigs, aim for a larger emergency fund to cover periods of low income.
Where to keep your emergency fund? Your emergency fund should be easily accessible, but also earn some interest to keep up with inflation. A high-yield savings account is a great option because it offers a better interest rate than a standard savings account, while still allowing you to access your funds when needed. Another option is a money market account, which typically offers higher interest rates and check writing privileges. making it a good choice for an emergency fund. Just make sure the account has no or low fees and easy access in emergencies. While it may be tempting to invest your emergency fund in the stock market for higher returns, this is not recommended. The goal of an emergency fund is to have immediate access to cash when you need it, without the risk of losing value due to market volatility.
How to maintain and grow your emergency fund. Continue making regular contributions to your emergency fund, even after you've reached your initial goal. Life circumstances change, and having a larger fund can offer even more security. If you need to dip into your emergency fund, prioritize replenishing it as soon as possible. Treat the fund like an insurance policy. Once you've used it, you need to restore it to ensure you're covered for the next emergency. Revisit your emergency fund annually to assess whether the amount still meets your needs. If your expenses have increased due to a new home, growing family, or higher cost of living, adjust your savings goal accordingly.